The views expressed on this podcast are those of the participants, not of Reuters News.
The purpose of our deal and the spirit of our treaty has been totally violated. American ships are being severely overcharged and not treated fairly in any way, shape, or form, and that includes the United States Navy. And above all, China is operating the Panama Canal, and we didn't give it to China, we gave it to Panama, and we're taking it back.
A deal involving Hong Kong tycoon Li Ka-shing, 43 ports and spanning 23 countries, risks getting caught between US President Donald Trump's trade war with China. In March, CK Hutchison announced plans to sell its 80% holding in the ports business for $23 billion. MSC, a Swiss-Italian shipping company, joined a BlackRock-led consortium and is hoping to buy up the assets, but China antitrust regulators are getting involved, and there's a risk that the deal will get tied up in this trade war. The implications of this deal and what it means for global trade, China and the US are the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with Breakingviews columnists. And I'm your host, Amy Donlan.
And I'm Una Galani. Amy, we have this fascinating standoff here in China, Hong Kong, between Li Ka-shing, which is Hong Kong's richest man. He's, known famously as a shrewd deal maker, the city's ultimate tycoon. People call him Superman, and between Beijing. And effectively, these two sides have come to head over what is a deal involving the second largest port terminal operator in the world. This deal is controversial because it involves two Panama ports that the Lees have actually operated for some 20 years, but they're important to the US because over 40% of all US container traffic passes through these Panama canals. And that may be really important in the coming weeks when, or maybe less so, when there's less trade going to the US, potentially because of Donald Trump's trade war. But it's we've been following this story for a few months, and the rhetoric about the sensitivity of Panama, and Trump has been talking about taking back the Panama canals as if the Chinese somehow own these assets, but they don't. They own the licenses to operate these assets. I mean, the thing is that the deal is happening against the backdrop of Trump's election, Trump's inauguration, and now Trump's global trade war. So it's very, very fascinating timing. And, you can sit there and say, are port assets sensitive? And that's a very open question. Some people in Washington think that China could pressure port operators to sabotage equipment, American military equipment that passes through these kinds of ports. And other people say, well, that's absolute nonsense because the port operator doesn't decide who can and can't come through the port and what people pay to use the ports. And so, it's a fascinating deal against a backdrop of worsening Sino-American relationship, and it's engulfed Hong Kong's richest man and top deal maker. And that's kind of what we've been watching. And so really the most interesting thing here is the timing and whether it is a deal that is a good deal or a bad deal. It just seems to be the timing is not very, very good.
I think as well, one really interesting thing about this as well, and we can certainly discuss this with Ka-shing Chan, our columnist in China, who's been covering the story very, very closely for Breakingviews, is there is obviously a bit of an issue, right, for China in this whole situation as to how exactly they encourage investment, but at the same time protect what they considered to be sort of strategic. So yes, we want to welcome obviously Ka-shing Chan, who, as I said, has been covering this story. Ka-shing, you're very welcome to the Viewsroom.
Thank you.
Maybe because, I mean, as Amy said, you've been following this deal really closely for a number of weeks now. Maybe you are the best person here to explain to us, why does China care so much about this deal? Why are they upset?
Yes, you just mentioned about timing. I think it would be helpful to sketch a rough timeline on how this saga has unfold. The whole thing, I think, started with late last year when Donald Trump, after he won the election, he began to voice about his concerns about the Chinese influence over the Panama Canal. He said it again in January during his inauguration speech. But at the time being, I think people at first didn't know how to make of it, because he also mentioned about taking over Greenland, and at some point I'm sure he mentioned about the moon as well. But and then on the March 4th, something happened. People start to realize that something very important or even seismic is happening. That was when CK Hutch, a very important Hong Kong company, announced through Hong Kong Stock Exchange that they're selling these port assets. And what's important is on the same day, actually, is same day, 4th of March, Washington time, Trump was giving his first speech in the Congress. And it was then he told the American legislators, lawmakers, that a big American firm is taking back the Panama Canal. So this is a very bad reading for the Chinese government. Just like what happened in August 2020, when ByteDance agreed to sell TikTok, and then they trigger a forceful intervention from Beijing to stop the deal. So we put the whole thing with the context of the trade war, that's the China-US trade war that is going on from going on. Then we can understand then really why Beijing is so upset. Trade war is about at the end of the day, it's about the goods and the flow of goods. And the shipping industry is at the center, at the heart of the flow of goods. So we can see the Trump administration, Washington's in recent months, as imposing a lot of measures on the shipping industry that is aimed at crippling China's shipbuilding capacity. From that's on Beijing side. You can understand why there's lots of suspicions why what CK Hutch is doing. They collaborating with Washington. There are even some hawkish views in China that there are plots to undermine the Belt and Road initiative. It may not be the Beijing's official line, but it explains why it's so concerned.
And how exactly has Beijing communicated its dissatisfaction so far to the world?
Yes, this is a very interesting thing going on. Something Beijing first has started to shouting at Li Ka-shing and CK Hutch through a Hong Kong newspaper, which is based in Hong Kong, but funded by the Chinese government, of course. Through a raft of articles in early March. And then they're just saying that this is a betrayal of the Chinese interests, and some articles even escalated to the national security level. So this is, yeah.
Oh, because I was just kind of curious about that. If maybe you could explain that to our listeners a little bit more, just exactly how that communication is done. So are these like columns? Are these like, how are the news articles? How does Beijing sort of communicate this through? How are these like source stories? How would they, like these kind of quotes that are exist about this deal?
The newspaper's name in Chinese is Tai Kung Pao. It is a pro-Beijing newspaper. Everyone in Hong Kong knows that whenever in the past, when Beijing want to deliver some message, they will through Hong Kong they will publish in one of these newspapers. And then, but more insignificantly, the Hong Kong and Macau office also publish these articles on its website. So kind of making it official stance of the Beijing government, of the Chinese government. But the thing is, the Chinese government, at least on the level of the Ministry of Foreign Affairs, has not directly commented on it. What is said so far is opposed to the economic bullying or something like this. They have not explicitly said that they oppose the selling of this deal. But of course, the antitrust regulator in China has recently put it black and white that no one, and warned against people trying to avoid its antitrust investigation. This is kind of a warning that no one should try to fast track this deal in any form.
Okay. And that really kind of brings me to like a very interesting point, I think, about this, because this is a balancing act, right? Like China has to be careful to put off foreign investment, right? Because this is BlackRock, which I assume they want involved in China in certain ways. So how do you think that they kind of can manage this challenge, or are they managing that challenge of China's economy is struggling a little bit. Now you've got a trade war. The last thing you want to do is put off foreign investment.
Yeah, it's a great question. I mean, it's true that China's President Xi Jinping has been actively courting the private sector of late and trying to revive animal spirits in China as a way of supporting the economy where growth has been slowing. And it's certainly not a good look for the state in any country to dictate what private companies can and cannot sell. Now, that said, you could take the other view, which is that perhaps the Hong Kong tycoons are exceptional in some way. They used to be the old power brokers of Hong Kong, and their star and their reign is rapidly fading as Beijing has a bigger voice in the city and how its operations are run. So there's a bit of mixed messaging there, but Beijing has often shown, particularly through the tech crackdown in recent years, that it's willing to take a bit of a reputational hit in order to keep businesses on a tight leash. That said, CK Hutchison, this is the Lee family's flagship holding company. They had to do something. The company was trading at a deep, deep, deep valuation discount, less than 1/3 of its book value, even today. We had been writing for a number of years about the fact that they would most likely try to deal their way out of this value trap that they have been stuck in. Li Ka-shing is a very shrewd deal maker. You always kind of, if he strikes a deal, you always think he's going to be on the better end of that deal. He buys when prices are low, sells when prices are high. And this deal is fascinating because the ports operation only really generates about 10% maximum of the top line of this conglomerate. But the cash proceeds they will receive are equivalent to the group's entire market valuation at around $20 billion. So it is a huge payday for shareholders in Hutch. And so, then they've also got Temasek, a Singaporean sovereign fund, locked up in that asset, and they've been trying to get an exit for some time. So this deal is a great deal for the Lee family. And what Beijing needs to do is try and manage its interests alongside those of the private sector here.
And what does BlackRock want in this situation? Because you mentioned Li Ka-shing is this great deal maker. Is BlackRock are they likely to overpay? As in, what do you think they want to get out of this, and why are they willing to enter the fray?
BlackRock is quite simply the world's largest asset manager, and they were on the prowl for a great deal, and this is a great deal. BlackRock's boss, Larry Fink, has been looking for a way to shore up his infrastructure strategy. They bought this thing called Global Infrastructure Partners last year for about $13 billion. And the idea was that it would lead the group towards doing deals that other people can't handle. Now, maybe they've bitten off more than they could chew with the Panama sort of the broader ports deal. But I think that ultimately, there are very few buyers in the world for these type of assets. The valuation versus other ports. I mean, there are very few listed port companies in the world, but the valuations that are around, this does look reasonably attractive. And there was clearly, although CK Hutchison says there was no political kind of motivation to do this deal, it was clearly some political pressure, or you could argue that the political pressure presented an opportunity to sell an asset quickly, and that is exactly what they have done.
So, Ka-Sing, what is the market telling us about what investors are expecting to happen with this deal? Because we've been talking here an awful lot about the situation at hand, which is that China is sort of intervening. The competition authorities are involved now. What do investors think in terms of how likely this deal is to actually go through in the form that it started out as?
The headline number of the deal, the sale price is almost as big as it's actually as big as a Hutchison, CK Hutchison pre-deal market cap. So it is a really good deal, as Yuna has suggested. So that's why after the deal was announced on the 4th of March, its share price surged by about more than 30%. But 30% is actually quite low, rather low comparing with the headline number. This underlines investors' concern that this deal is a bit tricky and may not go through. And then after over the last 2 months, at some point, especially after the so-called Liberation Day, the premium, the share price has dropped back entirely to the pre-deal level. Then there's in the recent last two weeks, there's some optimism coming in, but as today, I think this is the Hutchison share price is trading about 11%, more than 10% above pre-deal undisturbed price, reflecting a fair amount of optimism that the deal can still come through in some form.
Yeah, I mean, I think here it's really, the payday is going to be huge. And one of the things that we've been writing about is the fact that actually, if you took the politics out of this transaction, there's not really a lot of reasons for Beijing to dislike this deal. I mean, as we said, there's not very many buyers for assets of this size in the world. And if it's not going to be a Hong Kong tycoon or a Chinese SOE, and bearing in mind that there are a couple of Chinese SOEs that are large port operators in the world, and it would probably be raise more competition concerns if they were to buy this asset, then BlackRock, the world's largest asset manager, which has its own interests in China, this sort of Italian shipping firm or family, are good buyers for this asset because they have nothing really that Beijing will really complain about. They have a good relationship with China. So if you take the politics out of it, there's lots of reasons that this deal will happen, but it may be sooner or later rather than sooner. And so I think the share price is giving us some sense that there is a little bit of optimism that something can be done, but it's hard to disentangle that from the trade deal that's going on at the moment. So, the US has lobbed triple-digit tariffs on China. China's thrown them back at the US, and the two sides can't even agree whether they are talking to each other. So we're not even in the negotiation stage of whether we can reach a trade deal. But as Ka-Sing was mentioning earlier, TikTok, the social media app, has become part of sort of the broader trade negotiations that he's been throwing around with China. And then you also have this deal, Panama Ports. It feels like a lot of this stuff can't really move, and Beijing is unlikely to sign off on or allow those things to happen until the trade tensions are at least sort of somewhat diffused with the US. So we may have to wait a while and see, but there's lots of reasons this deal could eventually happen.
And that takes me, I guess, maybe just to wrap up. I was sort of curious, you rattled off some really interesting kind of statistics about CK Hutch, just in terms of that discount that it was trading at, how it really needed to do a deal, and how you guys have been pointing that out. What happens if this deal doesn't happen? What if we continue to see the trade tension? It becomes too difficult for China to sign off on this. What happens then to CK Hutch, just in terms of that discount? Is there something else they can sell? Are there other things that they are exploring or could explore?
Well, they are trying to sell some European telecom assets. They have been doing deals left and right a little bit. I mean, and if this deal doesn't succeed, we may not officially ever come to know anytime soon, because sort of when deals are not approved by Beijing, they tend to die a slow, quiet death. I mean, there is a timeline. At some point, the sort of exclusive period of negotiations, because this is not a binding deal still. This is still sort of a tentatively inked deal. So once those negotiations sort of expire in a couple of months' time, then we will probably get a better sense of whether this will or won't happen. But I mean, I think the real danger for CK Hutchison is that they went out into the world, they built this international portfolio of assets, and they were always welcomed in the world, and they were seen as sort of preeminent Western type of capitalists. And now, if they are increasingly associated either by Washington or potentially with other governments as being part of China, and obviously Hong Kong is part of China, but like whether they are sort of more seen as politically the same, and that's reputationally quite difficult for them, because infrastructure assets are traditionally very boring things. But if people suddenly think that these are sensitive, strategic assets owned by the Chinese rather than boring humdrum infrastructure assets owned by CK Hutchison and the Lee family, then that complicates buying and selling all sorts of things. And then the question mark around the group's valuation could become even bigger and deeper, and I think that could actually be, the stakes here are pretty high.
I just want to add a little quickly to add to. I totally agree with Eunice was this, but I just want to add one small story that the shipping tycoons throughout history has a proud history, a long track record of turning diplomats and bridge the political situation tension. For example, YK Pao, he's a good friend of Li Ka-shing. He's one of the two Chinese who have become the vice chairman of HSBC together with Li Ka-shing. When in the 80s, he promised Margaret Thatcher to build a ship in the UK. And then after that, he go to Deng Xiaoping to say, I will also build a ship in China. That's how he brokered the talks between Margaret Thatcher and Deng Xiaoping to about the future of Hong Kong. This is kind of thing that shipping tycoons can do. This time, I think Li Ka-shing has a chance to do the same thing. This is to use the shipping assets, the container assets, to bridge two worlds together. Now, if he is a Superman, if he cannot do it, I don't think anyone can do it.
Well, it's a fascinating situation. I mean, we've got BlackRock, Beijing, Temasek, all sorts of interested parties in this story, and it's very much live. And Ka-shing and Una have been writing incredible things about it. And I know we'll continue to do so until we have either a slow death, the deal may die, as Una said, or it may prove to be one of these examples where a shipping deal maybe is a sign of things that are improving in terms of trade. So Una, Ka-shing, thank you so much for your time.
Thanks.
Thanks, Amy.
Thanks for tuning in. This podcast was produced by Oliver Tashlich in London. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favourite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and reuters.com.